The Dow is down following growing uncertainty over inflation and tariffs. With just an hour to go in the trading week, the Dow is currently down almost 1.75%, a little more than 700 points. The S&P and Nasdaq remain down a little more than 2% for most of the trading day. Now, the core personal consumption expenditures price index, or PCE, the Fed's preferred inflation measure, ticked up last month, more than economists had forecast, and signaling that price hikes remain stubbornly high. Joining me now is Paul LaMonica, senior market analyst writer at Barron's. Why are we seeing this, Paul?
Yeah, this is brutal. I think that a big part of it, as you mentioned, the PCE, personal consumption expenditure numbers that came out this morning did show that core inflation was a little bit higher than expected. That's obviously the inflation numbers that back out food and energy. The market had really been starting to believe that inflation is cooling, and I think it still is. The problem is that it's sticky, it's persistent, it's not going down as quickly as we'd like it to see. And you couple that with worries about maybe inflation going higher again because of tariffs that have already been implemented and even more that are about to kick in. There's a lot of anxiety on Wall Street about what's going to happen to consumer spending, what's going to happen to auto sales with the auto tariffs. So, it's sort of cliche to say Wall Street hates uncertainty, but guess what? Wall Street hates uncertainty.
We've had a couple of days like this, Paul. So give us a big picture of where we're at and what are you going to be watching for the next few days, especially April 2nd coming next week, more tariffs set to take effect.
Yeah, definitely. I mean, when you look at the markets, we're down for the year, but we're still, not terribly far off of some of the all-time highs. The S&P 500 is no longer in what's called a correction, which is more than 10% below a recent peak. So that is good news if you want to consider that it could be worse. I think what everyone's going to be looking for is what happens with those tariffs on April 2nd. Are they going to kick in and then that's going to be it? And we face a new kind of world that countries, are going to have to adjust to when it comes to trading with America? Will there be room for more negotiations, be it last minute before the April 2nd deadline or afterwards? We know President Trump loves making deals. And then also, don't forget next week, the jobs report for March comes out on Friday. That's going to be something that Wall Street is looking closely at, because if there's weakness, particularly on the government sector because of all those DOGE cuts, that could be a concern. And the jobs numbers also have, as part of that, a figure called average hourly earnings, which is wage growth. When wages are going up pretty dramatically, that's usually a sign of inflation. So if wages start to cool, that may not sound like great news for consumers who want bigger paychecks, but it would actually be welcome news to Wall Street and the Federal Reserve. It might allow the Fed to start cutting interest rates again later this year because they'd be less worried about prices and more worried about a slowing economy.
Paul LaMonica, thank you so much.
Thank you.